Hello and welcome to a new edition of Budget for the Bazaar. We're talking about pre-budget expectations. With me is Dr. Tirthankar Patnaik at Religare Capital Markets with his thoughts on what Mr. P. Chidambaram will or will not do rather. Thanks very much, Dr. Patnaik. Great to have you with us here. What is your sense? First up, top down, is it a good budget we're looking at? Is it a bad budget?
Responsibility-wise, the finance minister would have to come up with a good budget. But we are in a pre-election year, so you might see some level of populism also creep in, as we've seen in FY09. So I'm expecting a mix, to be honest.
So a bit of good, a bit of bad.
A sweet
and
and
we're
sour
talking
mix.
about good and bad from the perspective of financial markets.
Absolutely, absolutely. And because the fiscal situation is not anything that would agree to be changed or meddled with in a big way. But we are in a pre-election year, so populism has to be in there, of course.
Has to be in there.
Absolutely.
Because many are saying that, well, this is going to be, actually somebody wrote a report saying that waiting for the dream budget, 2013. So people's expectations have gone up. Mr. Chidambaram has sort of travelled overseas, canvassed extensively in terms of what he's going to do. He said explicitly, and I quote, it's going to be a responsible budget. And you're saying that there will be elements of populism as well.
It might be a dream budget after 97. 97 was the dream budget. That's
actually after last year's budget, this would be anything would be a dream budget.
Absolutely. That could be one way of looking at it. But the term that people have used for a dream budget has been the 97-98 budget, when he fixed customs taxes. Customs duties were above 50%. They were brought down to 30-odd%. Peak tax rates have not changed since then. India actually moved up to what's called a Laffer curve. So tax growth, meaningfully outpaced nominal GDP growth. So that was the dream budget of 97. People are expecting some sort of a review even there. But all the same, we've heard news about the food security bill again coming in. We've heard news on the direct cash transfers where implementation has not been, up to par, I would say. It has been started in about 50-odd districts. So there is a lot of, electoral ploy also coming in this picture. So which is why, we would be slightly cautious in looking at or terming this budget or hoping for it as a dream budget.
We will be prepared.
We will be prepared for a mix.
Will it be a dreamy budget? In terms of the numbers that it puts out. Because this is the last budget possibly before the election year. And,
yes.
They can put in pencil in whatever they want. But at the end of the day, will they be around to answer questions whether targets were met, etc. or not?
My read is, that's one way of looking at it, because next year they'll essentially go for a vote on account, and the new government will again present a budget in July, as what happened in 2009. And so it is possible they could do that. But my read is that there will be some more responsibility on it. So I hope they don't go dreamy all around, as you put it. Okay. We've done some calculations and shown that 4.8% for FY14. More importantly, FY13 5.3 is possible.
Right.
4.8 for FY14 is also possible,
okay,
provided certain cuts are done. And so showing this number will not be difficult. And given,
no, you mean doing the getting to the target of 4.8 won't be that difficult as well.
Getting to the target in terms of some of the cuts that we have sort of suggested. One of the major things that the government is doing is they have massive subsidy deferrals now. So subsidy numbers which are put out for a year are not necessarily paid out in that year. This is a feature of the cash versus accrual accounting that the government really does. And my read is that this year that number is going to essentially go up.
Okay.
So that's one way of controlling the non-plan expenditure for the government. And in addition, if they really are serious about, for instance, a graded price in diesel or auto fuel prices, some sort of rationalization on fertilizers as well, then you might see a 4.8 number actually coming in. It will not be off the mark actually.
We're talking about cutting expenditure, right? that's the focus. That's yes, almost seems to be the single-minded focus. We had expenditure numbers come out, which showed that to a great extent.
They have been cut, yes.
So maybe we'll see more of that in the budget.
The way to read it would be that, we've started out the year with a 20% growth in plan expenditure. Plan expenditure is something that the government has in control. It is decided with states, and for a year the government decided that they will do about 19.8% or so. This year, the number that they will come up with would be around 10% growth. So they have cut down on what was budgeted. All the same, the number is higher than the previous year. So FY13 numbers are still higher than last year.
So the revised number would be higher than?
It will be higher than the
actual last year number.
Exactly, but it will be much lower than the budgeted number.
Correct.
So that's what will, pretty much play out in FY14 as well.
Right.
So they would come up with a decent number. This is the plan expenditure that we're doing, and if they are really serious about meeting that 4.8% number, they would cut down on plan expenditure on the budgeted numbers. So you will not see, in other words, a cut in plan expenditure prima facie. From the budget, you will not see that we're going to cut down plan expenditure, because that's going to be viewed fairly negatively by both the markets and rating agencies, that India is not really, or the government is not really doing enough to boost investment in the economy, because plan expenditure is essentially capex, right? So you will see a
so fairly healthy plan expenditure growth number, very aggressive fiscal deficit number. But when he puts those out, what would be essentially, what are the other elements?
I mean, non-plan expenditure is about 2/3 of the budget. So we have an expenditure number of roughly 14.5 trillion, about 15 lakh crores. And of that, about 10 lakh crores is non-plan expenditure. 5 lakh crores is about plan expenditure. So cut down in plan expenditure is desirable or not, but it doesn't move the needle. Non-plan expenditure, where one really expects the government to do something, and that's where the subsidies are the major part. So my read is that partly you will see a graded price rise, but a large extent could be just subsidy deferrals. The experience that we're going to have for FY13 would pretty much be repeated for FY14.
So basically, a lot of the payments would be deferred into fiscal 15.
Yes.
That's what's going to happen.
If they are not able to meet the numbers, pretty much.